All right, so welcome everybody. Hopefully you guys having a great weekend and coming to an end. Get ready for Monday. I think Monday's market's open, right? There's no special day, anything like that.
Hope it's open.
Yeah, right. I'm excited. I've been waiting for it. Anyway, so what I want to share with you guys last week was great. We did pretty amazing on our trades. 5 out of 5 green days. With no headache trades, to be honest. Last week was like so clean. Not that we took all perfect trades, but some of the trades that we took a loss on, we immediately cut it, and we were able to switch bias immediately with conviction and profit significantly and go green. So 5 out of 5 green days was pretty great, amazing. I also want to share with you guys exactly what kind of gave me the conviction of these trades, and also now I know I preach so hard on using the SMAs, and I've been really sold on it. And then you guys, and I know a handful of you guys had switched over to EMAs, which is exponential moving average. And I was kind of stubborn about it because I like to stick to something that I want to really understand and master, and that's what I did with SMAs. And then after really understanding the way they behave and move, then I can comfortably say, okay, now I can go check out another indicators, which is the exponential. But they're supposed to be similar. They're just behavior-wise, their exponential is more responsive versus uh, SMAs, which is the simple moving average, are more delayed, I would say. So after doing some back testing and really comparing them side by side in comparison, um, the exponential moving average were a much more reliable flow when it comes to moving in the chart itself, which I will share with you guys. Um, I'll put it side by side in comparison so you guys can see it for yourself. Okay, let me see here. All right, let me know if you guys can see my screen.
Yeah, we can see it. Yeah.
Okay, awesome, awesome. All right, let me load this guy up with Squeeze Pro. 1 minute. There we go. Okay, so on the left-hand side, I'm gonna delete these arrows for now. Okay, and then I'm gonna squeeze this up. All right, so on the left-hand side, we're gonna go into 5 minutes so you can see it better. Left-hand side is the simple moving average, okay? And actually, the 1 minute would be better because I trade and scalp in a 1 minute. All right, so side-by-side comparison, okay? As soon as my chart loads up here. All right. So the left side is the simple moving average, and on the right side is the exponential moving average. I have the 10 and 20, the 50 is the blue one, and then this orange one on the right is the 100, and then the 200 is the red. Um, on the left side, simple moving average, 10, 20, 50, 100, and 200. But if you look at it closely, especially in a 1 minute, right, which is what I scalp in, look at this SMAs, right? You see how it's pretty choppy, right? Like typically we'll get on a trade when when it's like above or below the 10 and 20 simple moving average. And it's no difference in the exponential moving average, but if you can see it here, it's more fluid. Like you can see how much cleaner. I mean, it's not like night and day difference, but there is a significant difference that you can tell to where every little bit of adjustments you can give you a better edge. But if you can see on the left versus the right, which one do you feel like it's more smooth, where it's cleaner transitions, or you can read it better, right? You guys can see that? Feel free to unmute
Yeah,
yourself.
right's way more clean.
There you go. Yeah, so here's a 5 minute.
I think it would help TJ if you took off the other lines because it's not like super clear, at least not on my end.
Which lines?
Just like the 150.
Oh, gotcha. Yeah.
Yeah.
Okay. But you can see there's they're very similar, but as far when you see in it live, it's actually very clean, you know. I like the EMAs better in that sense. And to be honest with you, like after watching, you know, dozens and dozens of other trading videos, and when they reference to an exponent, a moving average indicator, they always reference EMAs, right? Very few of them that I've found that reference a simple moving average. So instead of me trying to, you know, trying to fight the trend, right? Everybody's using the exponential, which is good because if everybody's using the same indicator, that's where the traders are looking at to enter or exit their trades, right? They're using similar, and that's how we're finding our edge is when there's more people thinking the same thing in a particular direction. Okay, so that's I'm using exponential. How many of you guys are using exponential moving average right now?
I'm
Yep.
using it.
Okay, all right. So a lot of you guys
Yeah, I've
already.
been checking it out.
Okay, I guess the better question is who's still using simple moving average? Nobody? Okay, perfect. So that's good. So that way I don't have to worry about like referencing the exponential and then somebody in the chat still like, what? What are you talking about? When did you switch over? So okay, I can make that clear. And then also I want to share with you guys everything that I have on my chart. All right. Um, so what I'm using right now, um, priority is I have this Thinkorswim code, which is hopefully I've emailed to every single one of you. If you don't have it yet, drop your email on the chat and I will send it to you directly because the code is very long and unfortunately I can't, Discord won't fit all the text in there and it gets all chopped up into two messages and you might enter it wrong. So drop your email. This is the buy and sell signal. It's comparison to the TTM scalper, which I'll put on the left side. Okay, give you guys a comparison. So this is on the left-hand side, this is the TTM scalper. You have the buy signal on the bottom and sell signals on the top. But look at the same thing on the 5 minute, right? Look at the right side, okay? There's only one, two, three, I guess two signals overall for the day on the same day on Friday, right? Versus the TTM scalper gave you a lot of up and down. And to be honest, it's noisier, right? The more signals you get, the noisier your conviction will be, right? Because you have conflicting belief. Is this the one? Is this the one? Is this the one? Versus if it paints the signals very rarely, and when you back test it and it's more reliable that it does go in your direction, then that's a better indicator to use. And this is what we've been using. And on the 1 minute, to be honest with you, if you can't handle the 1 minute, it's fast. Okay, it will it will repaint itself. But to be honest with you, in options, as if you're trading 0 days to expiration, this is good for scalping. And I use this signal still in conjunction with the exponential moving average, right? So if you have a trend down, if you have a stock that's trending down heavily, you're likely wanting to wait for the sell signals, right? You don't because overall the big trend is downside. Um, that way you increase your edge, and especially if you're trading against a resistance, which is the exponential moving average, and you're short into that. And if you have a sell signal, that's a better confirmation. You can do one or the other. You can use the exponential moving average as your resistance level to get in, and then wait for the signal to add into your position because sometimes you can do like a one contract starter and then you can build into it as more indicators present itself in your favor. Okay, so that's the buy sell signal. It was originally a trend reversal signal, but I recoded mine to buy and sell, keep it simple. And also the bubble signal is also smaller, so it doesn't take up too much real estate. And the other indicator down below is the Ttm Squeeze. This is actually a premium squeeze that I had to purchase myself. Um, and this is available for you guys if you want it. This is a Ttm Pro Squeeze, basically. It gives you three different levels of signals of squeeze patterns. Okay, so in this example, we're gonna go in a 5 minute. Let's see if the SPY has a squeeze. Okay, so there's no squeeze on any time frame. But you can see down below here, you can see different colors. The green bubbles right here on the straight line is basically indicating that a squeeze has already fired. So right here, the red was telling you, hey, there's a squeeze forming here, right in this level. Okay, right here is basically it's just buyers and sellers are equally fighting, right? So now, once it breaks to the upside or the downside, it's going to be exponential, meaning whoever was wanting to go long are now wanting to cut their positions and get out and taking a loss. Therefore, they're selling their positions, and all the short sellers are also adding into their positions. So therefore, it's more explosive. So as you can see right here, it turns green, and it basically tells you that hey, the squeeze is now firing to the downside. The squeeze doesn't tell you necessarily which direction it's going to go, but it gives you a heads up that hey, when this build-up right here releases, it's going to be a greater move than normal. So therefore, as a trader, we're looking for volatility to capture, especially with options. Volatility increases your premiums. Therefore, your gains can go from 10, 20 to 50 to 70% in a few candles in 1 minute. Okay, which is great for scalpers like myself. The colors itself, the red, which is a, a momentum to the downside, that's a high momentum. Once it turns yellow, that means the selling momentum is now slowing down. Okay, and then as you can see, it typically transitions to going bullish. So meaning that the sellers are losing, the buyers are now starting to take over. And once you go light blue, which is what you see here, so here's another squeeze. You have red, yellow, and then sometimes you'll see blue, which is a high level squeeze. So red would be low squeeze, yellow would be a medium squeeze, and then sometimes you'll see a blue dots, which is rarely, that is a high squeeze potential. This is more pressure buildup. Okay. The light blue is buyer momentum to the upside. The dark blue is now the buyers are or the buyers are now wearing down and sellers are starting to step in. Okay, that's what it means. So you can use those in conjunctions with your buy and sell signals and your exponentials. So to be honest, those are the only three that I really rely on to take my trade or get out of a trade if I'm on the wrong side. Okay. Another thing that you don't that's not really uh, a signal to really like crowd your chart is up here you'll see these green boxes. You have the 1 day, 1 hour, 15 and 5 minutes. Actually, you can also see the 1 minute here. So these four right here is similar to the TTM Squeeze Pro down below. But the beauty thing about it is if you only have the TTM Squeeze Pro down here, whatever time frame you're in, especially if you don't have multiple monitors to look at different time frames, if you only have the TTM Squeeze Pro, it'll only tell you, hey, 1 minute has a squeeze, right? Because you're on a 1 minute. You won't know if the 5 minute, the 15, the 30 minute, the 1 hour, the daily, if there's any squeeze in that time frame. But with this indicator right here, with that indicator, I can be I can be in a 1 minute time frame and it will display a squeeze. So let me find a different stock that has different time frame squeeze. Let's see, AMC. I'll pull AMC here. Okay, check out AMC. So I'm on the right hand side, I'm on the 1 minute time frame. And on the 1 minute time frame, let's scroll it over. Okay. So 1 minute time frame says, hey, there's a squeeze building up right here. There's a squeeze building up and it hasn't really released any major trend, right? But if I only had one chart, I won't know that the 5 minute has a squeeze or the 15 or the daily until you switch over to that time frame. Okay. So it's telling you the 5 minute is range bound right here. You have a squeeze potential that's going to move to the upside or the downside, and similar to the 15 minutes. Okay. But with this code, it allows me to see it without having to jump to a different time frame. So it gives me a conviction. So the way I use this indicator is, let's say I'm on a 1 minute, right? And I'm trading. I'm like, okay, I have a squeeze on the 1 minute, but I also see a squeeze on the 15 or in the 5 and the 15. So in that sense, the 1 minute is going to be my trend starter, right? Like I mentioned in the past. So if the 1 minute starts to trend on the, let's say on the downside because we're bearish, so then that'll give me a conviction. If I'm on a trade on the 1 minute, I'll tend to hold it more longer because the 5 minute still has a squeeze. So meaning when the 1 minute fires, the 5 minute is going to follow, and then the 15 minutes is going to follow, and that's going to be a major exponential move to that direction, right? And that also gives you a another way you can tell if you should get out of your position is, let's say the 1 minute starts to bottom out and the 5 minute still hasn't fired, but then you see the 1 minute starts to climb. Well, this 5 minute can actually fire to the upside where it's a reversal. And in conjunction with my buy sell signals, it's going to literally tell me, hey, okay, you were short up here, you're going down, going down, going down, and now it starts to bounce up. You're like, okay, well, I still have a 5 minute that's a squeeze. Maybe that'll fire to the downside too. But if you get a buy signal right here, right? I'm not even gonna fight it. I'm just gonna be like, all right, just get out. I can get back in when it repaints a sell signal or this buy signal disappears. And that's how I can use it. And honestly, like these buy and sell signals don't come on very often. Not unlike the TTM scalper alert like this. It'll come on and off like so fast, like I don't even want to pay attention to it. I've used it in the past. I've had some success on it, but with this buy sell signal. Like Gertie has been using it, and Gertie has been green days five out of five last week as well. So and that's he strictly follows the buy sell signals. So that's kind of where we're at on this. So that's all of the indicators I use: the 10, 20, 50, the 100, and the 200 exponential moving average. The buy sell signal. I have the multi-time frame TTM squeeze, and then the TTM squeeze pro down below. And that's how clean my chart is. And show you guys, right? Let's see here. So that's overall my chart right there. Okay. I don't have any other fancy. I've tested the RSI, the MACD, all the other like the Fibonacci and stuff like that. Oh, another thing I want to mention, this buy sell signal is actually coded based on the Fibonacci retracement numbers. So let me show you guys the code. And I've been geeking out on literally how to mess with the codes on Thinkorswim. Let's see here. Trend reversal. So go back to the code. Let me give you guys a little snippet on what that looks like inside. Okay, I know this is geeking out. Let's see if I can find it here. It's based off of Fibonacci retracements. See how long this code is? And I wouldn't suggest you putting this on if you're using a laptop. Like it better be like a high performance or gaming laptop or something because it will slow it down significantly. Okay, right here. So as you can see, here's the fib number that we know of, right? 3.8, 50, 618, 778.6. So it's pulling off data off of the Fibonacci as well with all the other fancy stuff on it. But that's what the short of it. It's based off Fibonacci. If you like using the Fibonacci, this code is definitely in line with that. And I don't have to keep pulling numbers on it um, or pulling the Fibonacci numbers like if you were to pull high lows like that, right? It's literally based off of that, but except it's cleaner. Any questions?
Hey TJ, on the buy sell in real time, when does it show up? Does it show up like pretty much like on that bar or like a couple bars later? Like when
It
does that buy
shows
sell show up?
about the second or third candles. of this. So for example, let's use this guy, this bubble area right here. So let's use this area right here, right? So that signal right here came on when this candle closed. Okay, if this candle is not convincing, the next candle will present, or whatever this candle does, it will paint this buy signals. If this candle right here was more bearish, this candle actually doesn't show itself. Okay, so it's calculating based on the behavior, and then as you can see right here as well, zoom in a little bit closer, you can see this line right here. That's your stop line. Okay. The, the crazy thing is when a candle closes below that, let's say this candle, this green candle right here, closes below, like actually close, this buy signal disappears. So therefore, it just cancels your buy entry, and you should be stopping out. Ideally, you should be stopping out. Now, it's your own discretion to figure out, why you should stay in or why you should get out, right? But overall, the code is telling you, hey, your stop line is right here. You have a clear line instead of saying, oh, I'm hoping it's going to bounce, or where is my next stop? No, this is your stop line right here, because in that sense, you have a downtrend, and now it just continued breaking the new low. Whenever it breaks a new low, you can treat that as like your Fibonacci 100 line too, right? And then typically what it'll do, it'll bounce up and use that level as a resistance to continue further down. So that's how I kind of follow that. And if to be honest, if you look back, right, if you look back, if you followed every single trade, you'd be profitable. Okay, you'd be profitable.
Is that exit line plotted on all signals? Because I don't see it on that buy, the first buy on that chart. Shouldn't there be like a green line below that?
On the first chart, what do you mean? Right
Well,
here?
where you were before. Yeah, I mean, yeah, I'm talking about those red lines above the sell and the green line below the buy.
Oh,
Are those on every single signal?
that's on every single signal, correct?
Okay, like the one right
Right
at the
here?
bottom, at the lowest point.
This
Yeah,
one right here?
where's the line below that? Yeah.
It's behind it. Here.
Oh, down there. Okay,
Yeah, it just
gotcha.
gets hit. It just gets hidden. Yeah.
Okay.
So as you can see, you can also use this on a swing trade. So let's say if you're swinging on a 15 minute. So looking at the 15 minutes, as you can see here, you could have had a sell signal, and the purple bubble is basically a neutral. Neutral, it's not a higher conviction reversal, but it is a sell signal over here because the last buy signal was back here, and it's telling you, hey, it can potentially reverse here now. Okay, and then obviously what it started doing, started breaking down, and you can use the other indicator like the exponential moving average as your confirmation that, okay, I fell below the 10 and 20 exponential. Now I'm going to short the pop on it at the open, right? And this is exactly what we did on this is an AMC, but obviously SPY did the same thing on SPY. We shorted the pop on SPY right at the open. Let's see here. Okay, so we'll go back to the 1 minute. Man, my chart's is like dancing around. Okay, right here. So we shorted this pop. That was a clean pop. Shorted that pop right there. And then this was actually I didn't do that one because I didn't know how far they're gonna let it pop. So I shorted the second pop right here against the open price and against the 50 exponential moving average. And we rode that
So
all the way down.
you got these two buys with no sell in between. Is that because of the indecision signal?
Where was that at?
Yeah,
Right here?
let's see. You can't see. See
This
the two buys at the bottom, and
this guy
then
right
there's
here?
the purple.
Yeah.
Yeah, that one right there. Yep, yep.
Yeah, so in this case, it gave you a warning sell signal, right? It's purple, so it's a low conviction reversal. And then this was the last buy signal, right? But to be honest, no candle closed below that. So right here. So here's your stop line right here, right? That was never breached. So therefore, it repainted another buy signal right here. This is actually a better confirmation for this guy back here, because this was a warning shot. It's like, hey, this could be a reversal trend. but then nothing closed down here. Um, on a 1 minute scalp, this could have made you a profit still. Like if you got in based on this candle signal right here, your stop was way up here, right? Actually, this one doesn't even have a stop line,
Now it's
right?
only the buys and the sells that
The
do,
buyers and
yeah.
the sells that has stop because remember this is a warning. It's not so much of like, hey, get rid of your long, right? So there was really no stop there because if it kept going, you should still be in. Ideally, you should still be
Yeah,
in.
that's the thing. Going by the rules of this indicator, it's if you don't hit your stop, you're still in the trade. So you're
Correct.
basically the second buy, you're already in the trade from the first buy.
You
So
already
it
in the
wouldn't
trade.
really,
I'd probably add on this. Like that's a
yeah,
better
yeah, that's what you could
confirmation.
do.
And look at that exponential move to the upside, you know? I actually, well, that was on Friday. Yeah, I traded this on my paper account because I ran out of my bullets on my small account. I took that trade. Was it this one? No, it was this one right here. It was towards the end of the day. Yeah, this run up right here. So I took that. I think I texted Alex too. It was like, hey, 392 should be ideal on this move. So it was this move right here. So I took this trade and then profited all the way 392, locked in, and I didn't touch it the rest of the day. But that's what we've been using, guys. 5 out of 5 green days. I feel like we're finding some momentum here. Of course, the market is constantly changing, so if it changed, I'm gonna adapt with it, and I'm gonna be flexible on what else is gonna work, right? I'm always looking at other traders and what they're using, what they're saying based on the market. Then I'm gonna be, open-minded about it instead of being stubborn to like one way. Okay. Again, if you don't have the code, drop your email down below. I'll send you the code. Uh, don't recommend it on a laptop because it will kill your laptop and move like a sloth or freeze or blow up. But these are the codes. The multi-time frame TTM squeeze in the upper left corner. I have the buy sell signal and then the TTM squeeze pro and then the exponentials. That's it. I believe it's a clean chart and it should keep your thinking clean as well.
What are you using to find supply and demand, or you just understand the candles and know where that's at?
Ooh, good addition. Okay. So with everything I'm using too, okay? And sometimes this is more instinctive trading is when to break the rules of trading against the trend, right? And trading against your exponential moving average trend is based on supply and demand, okay? If you haven't really watched too many videos of supply and demand, I suggest you should because the bank institutions trade based off of supply and demand. Okay, and they work really well, especially on the bigger time frame. Okay, so let me see here. I'm gonna find a good example. Let's go here.
Yeah, what are you doing?
All right. So supply and demand is just basically it's no difference in support and resistance. So if you back in the day, if you learned that hey, support and resistance, you draw your highs, you draw your lows like that, right? That's what you know basic on supply or support and resistance. It's no difference to it. The only difference is instead of doing a clean line like this, is fixed. Like you're like, okay, if it gets up here to 418.46, I'm gonna short it. That's where the resistance is. Or hey, I'm gonna buy when it gets to 407.16. I'm gonna buy right there to go long. Supply and demand concept is a range. So if you look at the high here and the low where it started moving, you should actually draw a box like this, right? So this is what you call a supply zone. Supply zone, it just means this is when the supply truly came in. Like you can't lie that supply came in right here because that's when it significantly sold off, right? And then you can say the same thing on the downside where the demand exceeded the supply because that's where it significantly pushed up. Every time it touched these levels, right? Buyers came in, pushed it up, and then sellers pushed it down again, and then there were still buyers in the zone, right? Buyers came in, pushed it up, it touched it several times, right, until it was broken. So then this area right here, just like support and resistance, this is now like your supply zone is actually up here, right? if you look at over here, this is where the real supply was actually accumulating. Not here because there's nothing there. So if you need to draw another line right here, right? A supply and demand zone, get rid of this guy. So then you can say, okay, next time the stock pops back up here, I'm going to short it. Or next time the stock pops somewhere around this level, I'm going to short it because these are the levels that the supply came in heavily to where it started pushing it. The same thing here. Supply actually accumulated versus we're thinking, oh, hey, it should bounce right here and push back up. It didn't. This was actually a clean signal that this was a supply accumulation and then distribution, right? It just distributed. So that's how you can play with supply and demand zones. The bank use it because the concept is the banks don't necessarily get in all at once. What they'll do is they'll get in a positions and let the market carry the rest, and then they'll manipulate it back up to where everybody's pushing it up, and then they'll sell more into the liquidity to put all their positions. So if they have, they're trying to get into a stock for 100 million, they're probably going to get in here with like 50 million or 20 million or whatever until it touches it a couple times, pick up orders, and then drive the market down. Okay. There's more videos of it on YouTube. You can find it everywhere, supply and demand zones, so that way you can better understand it to use to your advantage along with your exponential moving average. So does that answer your question, John? Right on. Okay. Any other questions, guys? Because that's all pretty much I have. And what we can do is we can do an open Q&A, and then also we can talk more about the new strategies that I'm really diving into to add into my tool belt for when the market goes sideways.
And about the code you sent, the TM Squeeze for the top four boxes, right?
Mm-hmm.
When how does it work? If you can go, if you know more about it, about when it's red, what does that mean? And when it's green, what does that mean?
Okay. So when it's green, there's no squeeze. It just means it's just neutral. The market doesn't have it. You're not in positions to have an edge in a particular direction. That means like unless you're using the other indicators like the buy sell signal or the exponential moving average, then you can trade based on that. But I use this TTM squeeze, multi-time frame squeeze on the upper left corner as a confirmation, or it gives me more of a like bias, right? So if it's red, that means there's a squeeze forming in that time frame. So no difference than what you see here in the TTM Squeeze Pro, right? The only benefit that you have having this code is you can see the different time frames if there is a squeeze forming in that time frame, right? So you'll see like I said EMC here. Look, you got 5 minute, 15, and the daily. There's a squeeze forming. I'm on the 1 minute right now, and you're like, wait, the well, there's a light squeeze on the 1 minute. Now let's look at the 5. What is he talking about? Oh, there it is, right here, right? Boom. But you won't see this on the 1 minute. Now let's say you're not on a 15. You're like, okay, you switch over to 15, and then boom, there's all your squeeze, right? And now you switch over to the daily. Now what is the daily looking like? Boom, there's your squeeze.
Okay,
Okay,
gotcha.
so that's how you can use it in conjunction with your other ones to give you a higher conviction on your direction. All right. Any other questions, guys, before we move on? Man, you guys are all here tonight. Did you guys have a good weekend? You guys ready for Monday?
Let's go. Let's make some money.
Awesome, man. Okay, so um, the other trading strategy that I was just really learning on this week, which I'll put it up here. I'll post the link as well. Let me see here. Where's that? Okay. So this right here, long strangle options, best guide. This video right here
Hey, what's
is
up? Let's
gonna,
make a deal. I give
oh,
you
come
all
on.
this money. It's about $20,000 here, and all you have to do.
Expiration. We need the stock price to be.
Okay, so the short version of it is, as you can see, it'll take up positions both long and short. Okay, this strategy is best when the market goes sideways. Okay, so as you can see right here in this example, this guy buys a 190 put and then a 210 call. He's got a little bit bigger spread. That's a 20-point spread, but as you can see, he's gonna be buying like a couple months of time versus, you know, we're buying in the same day. So if you buy in the same day, what you want to do is you want to look for a sideways consolidation, right? So let's say, for example, um, let's find a market that went sideways. So right here. So for example, this sideways action right here towards the end of the day, this is best when you to use that strategy, right? So it went sideways. Well, it's not going to stay sideways like this for too long, right? So the thing is, basically that strategy is saying, hey, if it breaks out of this box right here, you make money. If it breaks out of this box to the downside, you make money. So what you basically do is once it breaks out to the upside, you get rid of the put side. If it breaks out to the long or to the put side, you get rid of your long, right? So you could be down, let's say, you know, 20% on your calls. You cut that out, and then you're already in put. So therefore, you're already making money, and then the volatility as well increases after a consolidation like this, right? So therefore, your IV, your implied volatility, increases, which is also increases your premium price. Okay, so like I said, this is the best strategy for when the market goes sideways. This is good for the rest, like as we know, after 9 a.m., the market goes sideways and boring. Or um, let's say an hour before closing, the market goes sideways and boring. This is the best time to do a strangle because you're buying calls and puts, and one is going to be profitable, and the other one's going to take a slight loss. But the winning side is going to cover your losses on the other because you're not going to let the calls go to zero if it's crashing, right? And you're not going to let the put go to zero if the stock starts to move up. But again, this is a good strategy for when the market goes sideways. And that's for going long, right? This is for long um, strangle. You can do a short strangle, which is what it means is you're the seller now, right? You're the seller. So as a seller, you want the stock to stay within range, right? Because you sold that contract. So if you're the buyer, you make money if it goes up, you make money if it goes down. But as a seller, you make money if a stock remains in the same level, right? And basically you collected that premium. So this whole time it goes sideways. But the way you can do it is instead of having a tight range like this, you can just say, okay, I want the stock to stay within this price right here from 420 or 1430 down to, let's say, 1272. So then you have all the whoever bought that contract, right, has all these range to break out of. So therefore, your probability of making profit when you have a bigger spread range is pretty high. But again, watch the video. That's just a simple example of what I'm giving you and really understand what this strategy is because my brain is literally like clicking and it's one of those moments of like, I can't sleep because I know too much now. Like I know how to make money when the market goes sideways and I know how to make money when there's volatility. And that's all it is as a trader. You're trying to build as much edge as you can based on market conditions. And if it goes sideways, as we know, when the market goes sideways, we tend to just step away from our computer. And a lot of time there is volatility that we miss, right? But then at the same time, you're like, I don't want to stand in front of my computer and freaking stare at candles that doesn't move. Well, if you buy a strangle, you can't wait for the stock to move because you're going to make money regardless. The only time you're going to lose if this stock goes sideways until your contract expires. If the stock remains within this box range, which is you buy a calls and puts within $1 spread, if it stays within $1 spread the whole entire time when your contract expires, that's when you lose. But we know that it doesn't, very rarely it stays that way. Very rarely. So the probability of winning is pretty high. But again, learn about it. Just want to share that with you, why it's keeping me awake at night and being excited for the market to be open. Questions? Or who else is using this strategy or any type of different strategy besides buying regular calls and puts? Everybody still awake?
No,
So one of the
I've
things
just
you
been
could
doing
try
calls and
is a
puts.
ratio.
Go ahead, Addy.
Oh, one of the things you could try is a ratio spread where you're buying one and selling two to pay the cost of the long position, and then you got your range determined at support and resistance, so that you pretty much capture the bulk of the move down from support to resistance, or vice versa.
Hmm.
You know what I'm saying? You buy one, sell two ratio, or you could buy one and sell three, but then you increase your risk.
Yeah, then you become more biased to wanting to be one side or the
The
other. It,
duration.
when
You
you
do.
do when you
You
do 1-to-1, you're neutral. You don't care if it goes up or down. You're gonna make money, right?
Yeah, yeah. But in this case, you're subsidizing the cost of the position with the extra call or put that you sold. Usually, I don't do it on calls because it's too risky. But on the downside, you can have defined risks. So you could buy one put, sell two, and get in for essentially a credit or net zero. And the time when you lose is when the position with stock goes the amount of the spread against you. You know what I'm saying? Let's say you buy 100 and you sell 50, 250s. So from 100 to 50 is your profit margin, right?
Hmm.
But then you really start to lose when the stock goes from 50 down to zero. This is a simple example, 50 down to
Yeah,
zero, because you got that $50 profit built into the first leg.
right. So you're trying to basically cancel out your debit by getting credit
Exactly. Yeah.
by
Yeah.
selling. The
Yeah. Then you,
challenging for that selling contracts is you got to be able to cover the 10 times the amount you're selling, right?
the margin. The
That's the
margin
rule.
is what they think of swim requires. Yes.
Correct. Yep. To be able to sell contracts, you gotta have margin account and be able to
Yeah.
cover 10 times the cost.
It's not quite 10 times, but I mean there is a margin depending on the instrument that you trade. There is definitely a margin requirement.
Right.
So
Okay.
on SPX, of course, it'd be a larger margin than on the SPYs versus a EMC, etc.
Gotcha. Okay. Yeah, definitely. It's something to consider. Different strategy again. You can cancel basically trade for free is what he's saying is you collect credit by canceling out your debit side, which is the cost of you
And
buying contracts.
you're winning in two situations. The stock can stay steady, in other words, range bound,
Hmm.
and you take home the credit that you placed, or it can go down some, or it go up, and even if it goes up, you don't care because you entered the position for a credit. So basically, you're keeping that credit. If it goes down some, you win. If it
Hmm.
goes down a lot, you lose.
Gotcha.
So obviously, what you don't want is a breakaway, runaway stock.
Yeah. Okay. All right. So let's see here. Let's take a look at the market right now. Let's see what it's doing. So look at the ES. Looks like it's gapped down further. So there's Sunday. Let's see here. 12. Oh, okay. So Sunday right here. So we closed on Friday, 10th. So this is where we close. So demand or supply came in somewhere at this level. Okay. So right now we have a demand zone building up, and we also have a buy signal on the 5 minute on ES. So likely if this continues to trend up, but I wouldn't expect it to bust through it too much right here. right? Because this is where the more more supply came in to the market. And so when we, I don't know how long, let's see, Sunday, so that's still a while. So we'll see it chop within this zone here. If it, I doubt it's gonna break through these upside right here, but I would like to see the market opens around this level on Monday, so that way I know I have a closer um, closer range, tighter range to play against, whether to the upside or the downside. Okay, because I know if we're within this box right here, then at least if we get above, I can go long, or we get below, I can go short again in the market. I don't want to be too far away from this. I don't want it to hit that level and then bounce back down to here to the downside, because I don't know if this is gonna hold, right? Because we are in a bear market to be able to bounce back up. I want it to be right around here, or at least consolidate for the rest of till Monday open, which I doubt it's gonna do. So that way, I wanna be within the supply or demand zones. I don't want to be in between, right? Preferably, I want to be up higher because it's a bear market and I have a higher conviction to the downside versus the upside. So that's how I would want the market to play out. And like I mentioned too, is tomorrow, guys, um, you know, share your analysis. If you're taking a trade, you don't have to take my trades, right? But if you are taking a trade, feel free to share your analysis with us, so that way, you're holding yourself more accountable when you're getting in a trade, right? Because if you're stuck on your own analysis and the market starts to go against you, and you don't have a game plan, or you don't have other confirmation with the rest of the group that, hey, this we're all short and you're going long, like, what do you see? Tell us, or what do you know, right? Then we can also share our side. But again, have a game plan, trade your game plan. Not because I said, I'm going short, you're gonna get out of your position, but stick to your game plan, okay? But sharing it with everybody kind of holds you more accountable to what your game plan is and executing on that. Because sometimes we have a plan and we don't execute on it, and you're like, oh, I should have gotten a trade, and then we'll put you in a spot to like, why didn't you take it if that was your game plan? Because trading is all about executing your game plan. It doesn't matter if you're right or wrong, but it's all about execution. Okay, everybody, who
Thanks,
wants
man.
the codes? Who wants the codes, or who doesn't have the codes?
I don't have the codes. That'd be good to like grab them.
Okay, I think I have your email. I'll send it to you.
Sweet.
Okay. All right, guys. That's all I got. Anybody else got a questions before we go?
Thanks, DJ. That was great.
Awesome.
Always.
All right. Well, we'll see you guys first thing in the morning.
Thanks, man.
All right. Thank
Yep.
you.
See you
Have a
guys
good
in the
night.
morning.
Thank you.
Bye.